The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and thank you for joining us today here at TFNN. And right now, if you have any questions, feel free to give me a call right here at 877-927-6648. Again, that's 877-927-6648. And looking on over at where the market's at right now, we got the S&P's up 13, the Nadex up 38. Russell is up 7 with the Dow up 106. We got the markets flying based on several things going on. Some decent economic reports in the U.S., but mostly because the Italian bond yields came in really, a lot lower last night. And Greece also put up the required stuff to get an extension on, more advanced funds for their bailout. And there's an expectation that the EU will be lowering interest rates again. So putting all that together, strong markets. And right now we got gold right now. It is down about 60 cents right now. We got silver. It's up over 1.5%. Gold did run up, but then pulled on back down. And looking on over, we got copper right now. It's up over 1%. All the commodities up right now. We got oil up $1. Corn up 5.77. Right there. So, just huge, massive spike in corn. $36.30. That's an insane move. So it may limit. Be careful there. We got soybeans up 24 points on the day right now, 1.7%. We got euro dollar is up, let's see here, 59 pips. Pound dollar up 19. Aussie dollar up 62. Euro yen up 55. Pound yen up 18 pips. With the U.S. yen down 1. U.S. Canadian down 38. And U.S. franc down 53. So that gives you the quick market wrap and update. And let's see here. Going on and looking at what all we had last night that came across the wire, and just this weekend in general. So if we look at last night, there was like I said, not really a whole lot going on because you had Japan and China were both on holidays. Japan and China's going to be on holiday for a good chunk of the week. And then looking on over here, what we can see is the Italian 10-year bond auction came in at 3.94. So percent there, which is great. They've been in the 4s, so the high 4s recently. So basically their debt cost has dropped dramatically since October 2010, and that's the biggest drop they've had. And literally going back and looking at the history, not even seeing, let's see, 3.94. I'm trying to find the last time. Yep. So that is accurate. The last time they were this low was October of 2010. They've been above 4% since then. And so, again, they dropped dramatically down to 3.94. Saw some nice currency moves, some nice gold moves off that. Obviously, silver, commodities, everything moving. Giving strength to the euro, weakening the dollar, making the dollar basically worth less. Therefore, things cost more. What will be interesting is they lower the euro interest rate, and and in some cases it's one of those weird double-edged things at this point. It's all cluster messed up right now, and they lower the interest rate. That weakens the euro because you don't want to own euros when you get less interest, but at the same time, that spurs on economic growth. So it's going to cause some interesting dynamics in your currencies this week, so definitely watch those, be careful, and trade them wisely. Looking on over at what else we had, the personal spending month-over-month came in as expected here in the U.S. Medium impact report, not a high impact. Pending home sales came in better than expected. So that was a great news report, came out right there at 10 a.m., and we got a nice surge in most of the markets right around that time. As soon as that report came out, everything flew up quite a bit. And that was the big leading, driver, after the market opened on this most recent surge that we had. And then the market just sort of, flew up and flew for about 15 minutes. which is about the expectation you have on it's called the fundamental shock. So you expect about a fundamental shock to happen. And then after that fundamental shock happens, then you expect things to sort of, go back into their regular technical patterns. And so we can see, the Russell, ran up. And I'm looking at a couple other indexes right now. And I'll pull those up on the charts. We'll go through each one of them based on those reports. So speaking of that, let's go ahead and do it and check it out. So right here, if we go on in and we look at the Russell, then what we can see is right here. So the Russell sort of moving, does this major, stop everybody out move. So you want to make sure you have a really good plan on whenever you're trading news or anything like that. But anyways, did a nice little pullback right before the news. Not uncommon at all, by the way, for them to pull the market back before the release comes out, and then it starts to take off. And so we see that happen right here. News takes off, hits the 0.7 deviation level right at about 15 minutes after that news, then just starts to oscillate on that. And then when it does that, you can notice even right here, not seeing a major move, really just oscillating in that same range. So we're probably going to be, my guess is pretty range bound on the indices for a good chunk of the rest of the day without some other information coming out before the day's over. But as far as planned news, the news is out, the news has happened, the moves have happened, and now just to enjoy. You can go in there. I mean, if you want to go in and do a little bit, swing trading, some scalp trading, things like that. I mean, that's sort of the main thing that's left for the major indices, at least for the next. We may get a little bit of surge movement, of course, in that last hour. You never know what's going to happen in the last hour. That's always fun. But right now, I'm not expecting a whole lot of movement on anything. And we can go over and check out and see pretty much the same impact on most of the indices as well. So we'll go over here, we'll check out the S&P. And, it was already rising up overnight based on all the European news that came out, the bond auctions. Those, again, came out at 5:12 a.m. So, but they came out, but there's just a lot of news that came out. Like I said, you got the Italian bond auctions, but you also had the announcements and the rumors circulating about, there's a lot of big news coming up this week. So we'll talk about that here in a minute, but it's everything flying on up there, 0.5, 0.7. S&P actually hit the 1 deviation level. So always important to remember when you hit those 1 deviation levels, I mean, that is the most important level, okay? And, my method is to definitely, be trolling my stop on the bar that closes above it. However, I want to do that on 10-minute bars because I want to give it room to move, okay? And there are times when there's just some common sense, okay? It's 1 deviation. It's 30% of the time we don't expect the market to break out of this level, all right? So when that happens, when you hit that 1 deviation move, it does make some sense maybe on part of, your charts and things that you do over here to go ahead and, move up at least on maybe part of your position, your stop when you hit a 1 deviation move. I am not the biggest fan, just my personal trading style. If I'm really getting in trading direction, I'm actively trading. I'm not talking about you set it, you walk away. I mean, I love like 1-to-1 and stuff like that on that because that's very relaxing. You walk out the door, you're not worried about it, you move on. But if I'm sitting there and I'm trading actively, if I'm managing my trades, I like to have trailing stops. I like to let my profits run really far. I want to make the market move against me before I just get out of a trade. So, I'm not just going to go, well, it hit this level, I'm out. Well, because it may go another 5 or 10 points. And but I think it is always prudent, always wise to go ahead and trail those stops in. So like right here, I set a trailing stop. And market moves up, oscillates, and I mean, it literally is just going nuts. It's going down, going back up, going down, back up. And I like to use about 5 ticks. So if we go over here and we move this down to about 84.25, and then closes below it, closes above it again. Can I move it up again? Not really. So I can never move my stop backwards. I can only move it in the same direction. Okay? Now it closes above it. Now this bar closes above it after that bar closes below, right there. So we got a bar above, a bar below, a bar above. And so I go, okay, well, it's below that bar, 86. So, about 84.25 right there. And that sets my stop. So I have one stop there, one stop there. This stop right here actually gets hit and out of the trade on that bar. So where do you go long? Well, this morning, I mean, you had a couple setups. The easiest one, really, I mean, it just set up perfectly before the announcement came out. But, I mean, you had a perfect breakout right there when it pulled back, and then broke out of this bar after the up move. And he had this real quiet oscillation period right here. This range bound, opening range, whatever you want to call it, move. But really, like right here, you got this going on. And just waiting, on the movement to happen. And it goes in, it sort of spikes above it, and then pulls back, and then goes in. Takes off. So, I mean, there's a lot of different ways you can trade, but that's just one of many. But I like to, get in on that breakout of the bar right there. And if I'm trading earlier, let's say I'm getting in on the 930. I mean, yeah, I could have easily have got in on this trade at this point, and most likely if I would have done so. Now, this is if I was trading 10-minute bars. I like to trade a unique style of bar, but if I was trading this type of bar right here, then I'd be looking down at about 50.25. So I probably would have got out on that, but then I would have got in and had a nice move, made the money back, and then more. So, there's just a lot of different ways to trade, but you got to have a profit management plan. You got to have a risk management plan. And I was talking to some other traders today, and one of the things I talked about was, the holy grail of trading, that thing that, all of us traders are always trying to find. And because we don't want to accept what it really is. Is there a holy grail? Yes, but what is it? The definition of it actually is what makes it elusive. And the holy grail of trading is not arbitrage. That does exist, and you need a lot of money, and you've got to put a lot of things together and do a lot of perfect math and get a little bit over and over again, and until it's gone, and then you try something else. So even in that of itself has its limitations. So what is that true holy grail of trading? Well, holy grail of trading is a trading system, okay, that limits your risk, lets your profit run, and in the end is more profitable than it's not. I mean, that's it. As funny as that sounds, it's not that one that calls everything perfectly. I mean, think about the turtle traders. I mean, they had a horrible win percentage, but they made an insane amount of money because they took the risk over and over and over again. Just boom, they just take the hit, a whole bunch of little hits. Risk $500 or $1,000, but then make 5, 10, 20, 30 grand. And, millions, really. If you go back and look at, the history of that, it's a really interesting story. And it wasn't about the probability. It wasn't about how often they won, okay? And so often we as traders get caught up in, that was a bad trade because it lost, or that was a good trade because it won. Trade's not good or bad, all right? Did you trade well? So it was a good trade if you followed your rules. It was a good trade if you took your stop where you said you were going to take your stop. It was a good trade if you took your profits where you said you were going to take your profits. Could it have been better? Could you have not if you broke your rules? If you didn't break your rules, win or loss, it was a bad trade. So stay right there, folks. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So just sort of going through the S&P movement right there that's going on right now. Dropping on down, let's check out the Dow. So on the Dow at the moment, it almost hit that one deviation level. So here is another lesson for you. When trading indices, the U.S. indices, Russell, Dow, NASDAQ, S&P, etc., usually there's going to be a leader of the pack, whichever one that may be. So in this case, I mean, we're seeing the S&P, it went up to one deviation already. We looked at the Russell a second ago, and it only hit 0.7. We go on over to the Dow. We see it didn't quite hit 1. And, of course, we can check out the NASDAQ, and it's been flying. All right, so it hit 1 quite a while back. So NASDAQ, of course, different animal all in of itself. But especially, between like the Dow and the S&P, sometimes even the Russell with that group, if you see one hit a deviation, you ought to be watching several indices. It's also good to watch the broad market index. But, if you see that happen, be aware of it. Be aware that one of the indices has already hit a full deviation, because sometimes that's your clue that that's the move for the day. And, even on the NASDAQ, when we hit that, right here around, 10:30? So, if we put that over there, that's where our stop's, right there at the moment. And then we hop on over. What time do we hit that on the S&P? Over here, the S&P, we hit it later. So at 10:30, we had just touched the 0.7 right there. So just started moving up our stop, which is good. So our stop started moving up right at that same time on the S&P. We can go over to the Russell. And over on the Russell here, we got 0.5. We actually didn't get a 0.7 move till like 12:10. And if we go on over to the Dow, so right there at 10:30, it just moved above, what are the 0.5? It wasn't until about 12:30, 12:10 there that it moved above 0.7. And then later around 12:50, when it started hitting 0.1, and that's really when I'm going to start checking. I'll start looking at the other indices, especially when we're nearing a 1 deviation level. So Dow's almost there. I'm like, hey, is the S&P there yet? You know, wasn't there yet, but it continued to go, and then it did hit it. So that's a good indication that the indices could be sort of, you know, could be done, could be cooked for the day. And I'm not saying that I don't use the deviations as like, oh, I'm going to reverse just because this happened. I think that'd be a bit premature. I need to see other things. I need things like RSI divergence, reversal patterns, you know, crosses of whatever indicators you like to use, whatever that is. But that's when I'm going to look for one. It doesn't mean that that's what I'm going to cause to be one. And ultimately, when it hits when it closes above that 10-minute bar and then back below it, that's when I'm expecting chop, okay? So I'm either expecting it to just fly on up, go into chop, or I'm expecting it to fall back. Well, isn't that like the only three things that could possibly happen? Yeah. But that's when I'm actually going, hey, this is the point where if any of these happen, I need to be tightening my stop. And I'm going to give it room in between levels. But it didn't close above it. So I give it room. I let it do its thing. I mean, there's 2 or 3 points just up and down. But then once it closes above, now I'm like, all right, now I need to stop letting it have breathing space. And then it does it again. Right there, it closes below, and then it closes back above. Okay? So I'm going to tighten that breathing space up a little more. And then on this bar over here, I am out of the trade. So, you know, that's what I'm talking about. Is like, at what point do you stop giving it room? At what point do you trail your stops? Because if you trail them too tight, your profits are never going to get a chance to run. But if you don't trail them tight enough, your profits are going to all be given back. And that is one of the ultimate challenges of a trader is, you know, do I take profit now? I'm at 1-to-1. I'm at 2-to-1. I'm at 3-to-1. I'm at 4-to-1. I'm at, you know, well, when did you take profit? And let's just say a long time ago on Apple, okay? Did you take it when it was at $50? $100? I mean, what if you bought the thing at 100? It was at 200. What about when it was at 3 or 4 or 5 or 6 or 7? You know, your take profit is not simply about your profit. And you might be aware of things, of course, and there's a reality that, yeah, you're going to know that you're up a ton, but you could be up a ton times 10. You don't know how big it's going to move. So just make sure to have a very systematic method on doing that. And I think that, you know, you'll find yourself a lot happier in your trading when you're not just literally staring at your P&L and trying to figure out whether or not you should hit that button to get out. And these deviations help me, you know, night and day difference on trying to decide where to tighten my stops and where to give the market some room to chop around a little bit before I tighten my stop again. All right, stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated most other exchanges. Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full station capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Brian's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is its daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom his clients to sell their longer-term position in AIG warrants, locking it at 1 trade. Brian sends out to his subscriber for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we'll come on back here to the Diagnostic Trading Hour, and the importance of having a very defined method in your trading for setting a trailing stop. And it can't. Your P&L is affected by the charts, but your P&L does not affect the charts. Okay, so where should your focus be? Should it be on what affects the charts themselves, the price, the volume, movements, deviations, fibs, whatever, or on what doesn't affect the charts, your P&L? And, I know some traders I talked to recently, I was like, try just hiding your profit and loss. I mean, don't overtrade your position. You got to know what a 5-point move against you is or whatever. And you got to know how many contracts that is that's acceptable. So your initial trade should be the only thing you're concerned with, your risk. I was like, from there, you just need to manage your profits based on what the charts. Get out when the chart tells you to get out based upon the rules you've set. And they literally talked about how it made a world of difference for them. So, I just, want to challenge you, your trading to the next level. And, even if you demo trade it for a day or something, whatever. But just really work on that simple concept. And, I want you to learn to trade off of charts, not off P&L. So I can understand maybe looking at fundamental news. I can understand looking at statistics. And I can understand looking at seasonality. And I can understand looking at technicals. But I can't understand looking at P&L. Because that is an emotional decision, and emotions really usually don't help us too much in our trades. And But I think that, you'll find that if you'll start to trade based on what actually does impact the trade, what does impact the market, and realize what you don't control. You don't control if the trade is going to win or if the trade's going to lose. Okay? You control the risk. You control where you get out. And I don't mean like where you get out where you want to get out. I mean like controlling your stops. Okay? So you don't control whether that's going to be, down here where you had your stop loss or up here or up here. But you do control that. So, take forward, basically take control of what you control already and stop trying to assume you control things that you don't in your trading. And, you can't stare at your P&L really hard and the number rise. You can't tap on the monitor and make the chart go down. There's so many things you cannot do. You can't cheer it on. You can't get some other people in a room all to cheer it on and it rise. You just got to manage your trade. And trading when done at its finest is absolutely boring. And the more excited you are, probably the less profitable you are. Because, you're really, you're not just trading. You're in there and it's becoming a very involved spectator sport. And, whenever you're in a game, if you're playing a sport, you're focused on that moment. And you're there like celebrating. If you're, playing a game, you're not there celebrating that, wow, man. And by the way, they just hiked the ball and you're sitting there like, all happy. Or you're not sitting there crying because, they sacked you and now you're on the third down. No, you're in that play at that moment. You don't have time in the middle of the game to think about the last trade, whether you got 20 yards or whether you just lost 10. Okay? Whether you scored or whether they scored. You don't have time. You got to get up and you got to play the next play on right now and focus on it and do what you need to do to make it happen. And do the best that you can do and control what you can control. You can't control how well they do or what they do. You can only control how well you do and what you do. You can only trade well. You can only play well. And the more you learn to humble yourself, have an honest estimation of yourself, and that's the definition I was taught of humility, was not having an overestimation of oneself and not having an underestimation of oneself, but having an honest estimation of oneself. And as a trader, don't have an underestimation, have an overestimation of yourself that, you can control it. And you can control whether the thing's going to go up or down. And if you get the right combination of indicators, you're going to know every time what happens. And, my charts are very clean. They have very, very few indicators on them. And if they're on there for a reason. And there's a reason why they're on there. Like, I know why it should work, why it's on there, how it impacts my trade, and why I should, actually use that as part of my trading decision. I don't just add it because I'm going to try out 50 different indicators today and see what happens. There's a time to do that, and that's fun, and that's good, and there's nothing wrong. Somebody throws an indicator out there, man, check this out and see what this is doing. I'll throw it on my chart. I'll look at it, if I think they actually have something to say, and, I may test it out. In the end, I want to know why. Why does it work? Why should it work? And does it work consistently? Does it work on multiple markets, on multiple time frames, over a long period of time? Has it worked historically? What's the exact way it's going to be used? So it's not just an interpretation model where I have to, stand upside down, stand on my hands and, tilt my head sideways to, oh, yeah, now I see it. Is it clear? Is it, does it come right out at me? And, but I'm very hesitant to add something. And I study it. I've been studying a lot of things. Like I studied Gartley's. I'm getting into those more and more, working on those. And I can tell you I haven't fully implemented them yet. Not because I actually think there's a lot there. A lot of traders that I admire use them. But I want to make sure I master them. I understand them. I understand why they work. I understand how they work. And that I can carry before I ever implement them into my trading plan. And I don't have to wait until I have that down. I keep trading. And at the same time, I don't go, you know what, I got it, I'm done, and there's nothing more. So I'm always looking to improve. I don't change how I trade in the morning. Oh, it was a bad day yesterday. Maybe I'll try these 4 things today and see what happens. So something has to prove itself, and in every way has to vet itself. Not only through me understanding what the tool is, how to use the tool, why the tool actually would have any impact whatsoever on accuracy, and then looking at it historically, doing market replays. I'm not talking about back testing where you hit a couple buttons and it shows up and it works, because back testing doesn't include the most important indicator of all, you. And I can give you the perfect system in the world, but you can sabotage it because you took a loss and now you won't take a win. And you just missed out on $1,000 winner and you lost because you took a $50 loss. You know, so back testing lets you go, okay, conceptually, does this idea work? But in reality, I like market replay because then I sit there and I'm actually placing the trades. And market replay is basically like NinjaTrader has market replay. Most platforms don't have this. And but I love market replay because I can actually go back and I can step forward in time by seconds as fast as I want. So I could go 100 seconds a second, or bars a sec, whatever. Basically, so I can go. Every second could be done in like 100 seconds, or every second could be done in 1 second. And so I can go as fast or slow as I want, but I have to go forward. I can't cheat. I can't look at the right side of the chart. And, there's no way for me to put all those pieces together. And it's one of those things I really, really want to learn how to master and do. But like I said, with the Tiger Gartleys, and I think there's a lot of cool things to do with that. And so I suggest that you do look at it, but learn it, master it, own it. And TFNN is a great place to learn how to take advantage of them. So, anyways, but I hope y'all are getting the point there. So I don't want to, take it too far, but some valuable little nuggets of wisdom there that I hope will help you make you a better trader. And let's check out gold. So gold ran up. I mean, it just took off to the races, pulled on up, pulled on back, almost back. I mean, literally just falling on back down now. Not a whole lot going on at the moment, but definitely doing a strong pullback. Silver has been having a field day. So ran up not only to one deviation, almost hit 1.5 deviations before pulling on back. And rolling on over there, we got copper. So copper right here, it's moving and just rolled over on the months there on the Nadex platform. And so it moved on up to a 1 deviation level. So right there we can see it hit 1 deviation before pulling on back. And then going on into corn. So on corn we got right here, like I said, massive, massive move. So you always want to be aware when you're trading these kind of markets, man, these commodities and, really any future contract, make sure you go to the exchange's website, okay? And so like CMEgroup.com for CME-based contracts. And then, for corn, we can go to agriculture. We're going to scroll on down. We're going to find the corn futures contract. Once we do that, we're going to scroll down and we're going to look for something that's very important. Daily price limit, okay? So, and what other price, limit rules? So are there limit rules? How do they work? Some things don't have limit rules. So like FX, I mean, the thing can just fly. So there should be no price limits on the current month contract on or after the second business day preceding the first day of the delivery month. So there's different things like that that you want to be aware of. But also, if it doesn't fall into that category, and you need to know, what does that mean? You need to be able to parse that thing out and figure it out, okay? And so it means the current contract month. So what's the current month? Well, the current month is April, right? On or after the second day preceding the day of the delivery month. So just make sure you put those pieces together, know how they work. But it's 40 cents a bushel expanded to 60 cents when the market closes at limit bid or limit offer. So basically, if it does get forced and shut down, then they'll expand it out. Well, why is it important that you know that? Well, how much is corn up right now? All right, let's look at it. 37.50. Well, how high has it been today? Well, it's got up to a high of 659. So you're talking about, let's see here, 69.25, a couple points higher. So I mean, it's right at that limit move. What does that mean if you're in? Get out. So I mean that's what it means. It means you're done. Do not go. I'm going to buy corn now, man. This thing is flying. It's up 6%. It is time to get in. This thing's going. I'm going to catch this train. Train's over. Okay? You missed that move for the day. Now, could you get in it again tomorrow? Yes. Could you get it again after it closes? The limit move's done. Yes. But right now, limit move. Okay? We're right at the limit move. Also, you should have known that limit move because you should have, if you were, now remember I said I like to trail my profits, trail my stops up? Well, if I'm going to set a limit order, I'm definitely going to set it like right before, a couple points before at least the limit move. Okay? So if it's, a whole, that whole move right there, if I'm expecting that on the CME, and I'm really not expecting it, but that's one place you could say, get me out. All right? I want to take my profit. So could you, well, man, what if it does another limit move tomorrow and it lock limits like 5 days up in a row? Well, that's awesome. But what if it lock limits the other direction before you get to open up your contract again? So, I mean, you get in there and you put in a sell and the thing just drops so fast, you're not getting filled, or it wipes it all out. So you get a limit move day, you get a 5% move day, be happy. 6% at this point. So, but don't expect anything else out of corn. But that right there, I mean, that is ultimately, one of your ultimate price level indicators. Okay? I mean, if you wanted to put that on your chart and draw it and go, okay, well, what was yesterday's settlement price? And how much up is it right now? And you can see it right here. Okay? You go over here. They'll actually give you the current quotes and everything else. And so you can see where the volume is. There's 155,000 contracts. There's also starting to build up some right there in December. But right now, all the volume is in July. And it's up the most, by the way, 37.4 right there. So if this thing gets on up to, 657 right there. So we're at 37.4, so 16 more. And what we do is prior day settlement. So you just go in, and that's how you calculate it when it moves. Calculate it off the settlement price. Okay? So if the settlement price right here is 619.6, then go ahead and add, 0.40 to that, and you're starting to get the concept of how a limit move works. All right, so, but it's just really important that you do get that whole concept, how it works, put it together, and if you don't, get with somebody who does. And because you should not be trading futures if you don't understand limit moves, because they will wipe you out. Okay. Now, what if that just feels really intimidating? Okay, and you don't want to have to worry about that. What can you do? Got an answer for you. TFNN.com. Hop on over there. Click on Nadex. Once you click on Nadex, click on Range of Markets. Click on, they got commodities. And guess what? They got ags. They got corn. They got soybeans. They got oil, natural gas, gold, silver, copper. So you can hop over. You can trade those popular commodities. You can trade forex. You can trade indices. And if you want to demo this out, you can click Our Products. And you can click under Demo Account. You can fill in the information right there. And you'll be able to get an account in about 15 seconds. They'll email you a password. You can log in, and you can actually start trading on the Nadex exchange in your demo account. And they'll give you $25,000 of funny money, to play with. And you can fund a live account by clicking clicking Create Account. Pardon me. But go ahead and click Create Account. It takes about 5 minutes to open and fund a live account. And now you can trade without having to worry about these limit move days. And all contracts are settled out at the end of the day in cash. You won't be stuck block limit. You won't have to worry about margins increasing on you. And in many cases, you don't ever have to worry about being stopped out in your trade. So we'll talk about how you can learn more about that when we come back from this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We're talking about, okay, so where are you going to learn more about Nadex? Well, if you're in the New England area, or if you're going to be in the New England area, we're going to be in Boston, right coming up here in like the next 2 weeks. So Boston, May 11th. And so you definitely want to be on over there. Click on that. And right there on TFNN on the homepage, you'll see the Boston link. And you can click for our Dynamic Trading Strategies Workshop. And being sponsored by Nadex, giving over $3,000 of prizes, giving away silver. Half ounces of silver, 1 ounce of silver, we're giving away books, we're giving away subscriptions. Dan Cook from Tommy's going to be there. Jill Hawley's going to be on out there. I'm going to be out there talking about Nadex binaries, Nadex spreads, deviation levels, and my diagnostic trading methods that I use. And Tom's going to come out and talk about identifying trades, doing trade setups, and we're both going to come together and talk about risk and reward management. And then we're going to wrap it on up with the free prize giveaway. And again, it is free, but you do have to register to make sure you have a seat. So hop on over there, register now, and then your next step, hop on over, make sure you get that Nadex demo account, and if you're ready, get that Nadex live account going as well. And as soon as you've done that, then start getting some trainings. Hop on over here and check out our Diagnostic Box Spread Analyzer. It comes with tutorials, it comes with the deviation levels, it comes with the Box Spread Analyzer, constantly adding and making new upgrades to it, and improving it further and further every day. And that'll basically what the spread analyzer does. It is all the math for you. So when you look on your chart and you're like, buy, sell, whatever, you can instantly find the spread. Instead of looking for 26 different possibilities, It's like, what are the 2 or 3 that meet my requirements? Which one do I want? Click a button, boom, ticket's open, and you can submit it. So that is the basic summary of how it works. But it's a 2-week free trial. So definitely hop in there, check it out, and, take it, to the next level from there. And, I hope to, help you out in any way that I can. And you can hop in, you can ask questions. And I had some students this week hop in. They asked me some questions, some subscribers. And, questions they asked like, I put in this order to do this at this level, and what happened? I didn't understand that. And I was able to lay it out for them piece by piece. And so that's one of the big advantages you'll have is, anytime, 24/7, you can hop on, post questions. And, several times a day I hop on there and I reply to all those questions individually for you to help make sure that you do understand, how to apply the scanner, how to use it, how to trade Nadex, questions on the binaries, questions on the spreads, and, just trading in general. So, make sure to take advantage of those tools and the other tools that are available for you over at tfnn.com. And, of course, you can listen to us anywhere at tfnn.mobi. Let's go ahead and check out where everything's at right now. We got the S&P up 15 points. We have the NASDAQ up 38.5. We have the Russell up 8 points on the day. Right now we got Dow up 128. Gold is currently down at 60 cents, with silver up almost 2% on the day. We got copper is up 1.29%, with oil up 1.6%. Corn is up $40 on the day. And right there, limit move lock. Soybeans, so up 24.25. And then we got euro dollar is up 0.0071, with pound dollar up 0.0029. And we got Aussie dollar up 0.0078, euro yen up 0.58, and pound yen up 0.18. US yen currently flat on the day. And, net change 0. So that's just, so it's incremental in pips. It's so small the Canadian market. And it almost makes me wonder, like, is it quoting? So, but, and then we got, you haven't seen that very often. And then, let's see here, we got USD franc down 0.059, and US Canadian up 58. So, let's see here. One thing I can pull up one more time for you before we exit on out. No more ticks, okay? Limit day. So we called it. It happened. It's done. You should have been out when you had your chance. So, all right. That was an awesome moving point. I hope some of you all took advantage of it. Have a great day. I'll see you tomorrow. Stay tuned. We have another great show coming up for you right after this.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.